The rise of the machines, how algorithms took over financial markets.
For too long, the narrative surrounding financial markets has been a comforting bedtime story, a place where individual diligence and strategic foresight lead to equitable prosperity. Yet if you have ever felt like an unsuspecting participant in a game where the rules are constantly shifting and the odds are inexplicably stacked against you, your instincts are proving quite correct. The notion of a level playing field, where human acumen reigns supreme, is an endearing relic, a quaint fantasy meticulously maintained by those who profit from its perpetuation. Prepare to discard these cherished illusions. For what you are about to read unveils the unvarnished, often brutal, truth about who genuinely controls the vast and intricate dance of modern finance. This essential exposition, the rise of the machines, how algorithms took over financial markets, will methodically dismantle the romanticized view of investment and reveal the intricate mechanisms by which advanced algorithms, rather than human traders, now dictate market movements and orchestrate wealth transfer. From the dizzying speeds of high-frequency trading that render human reaction times obsolete to the calculated chaos of flash crashes, you will discover why your traditional investing strategies are akin to bringing a butter knife to a digital arms race. Understanding this profound shift is not merely academic. It is imperative for anyone seeking to navigate the increasingly complex and algorithm-dominated landscape of global financial markets.
The algorithmic takeover. Your market is now their playground.
Ladies and gentlemen, gather around. It is time for a brutal dose of reality, a truth bomb delivered with the precision of a high-frequency trading algorithm. For too long, you have been told that the stock market is your oyster, a democratic arena where diligent research and shrewd decisions lead to prosperity. That, my friends, is a fairy tale spun by those who profit from your naive participation. The unvarnished truth? Your market is now their playground, and they are the algorithms. The algorithmic takeover is not a conspiracy theory, it is a cold, hard fact. We are not talking about some futuristic dystopia, we're living it. Every single day, trillions of dollars are traded not by human hands, but by lines of code, by artificial intelligence systems that operate at speeds incomprehensible to the human brain. These are not your grandpa's stockbrokers making educated guesses. These are hyper-optimized, predatory programs designed to extract every last cent from the market, often at your expense. Consider this. While you are agonizing over whether to buy or sell a stock, perhaps after reading a few articles or watching a financial news segment, these algorithms have already analyzed millions of data points, executed thousands of trades, and moved on to the next opportunity. They are not just faster, they are fundamentally different. They do not feel fear. They do not experience greed. They simply execute their program directives with ruthless efficiency. This is not a fair fight, it is a slaughter. High-frequency trading, HFT firms, armed with supercomputers and direct access to exchange data, can see your orders before they are even fully processed. They can front-run your trades, buying and selling fractions of a second ahead of you, skimming profits off the top. This is not illegal, mind you. It is simply advanced market mechanics. It is the financial equivalent of playing poker, where your opponents can see your hand before you even place your bet. How charmingly democratic. The market, once a place for capital formation and investment, has been transformed into a digital coliseum where retail investors are the unwitting gladiators, often losing their shirts for the entertainment and enrichment of the algorithmic overlords. You are not investing. You are providing liquidity for their sophisticated strategies. You are the plankton in a vast ocean, and the algorithms are the whales, consuming everything in their path. Do you truly believe your fundamental analysis, your careful consideration of a company's earnings report, stands a chance against a machine that can process that same report? Cross-reference it with global news, social media sentiment, and historical trading patterns, and execute a trade within milliseconds. It is an absurd notion. But your edge is a quaint relic of a bygone era. This is not to say that all hope is lost for the individual investor. It is merely a call to shed the rose-tinted glasses. Understand the game you are playing. Recognize that the level playing field is a myth perpetuated by those who benefit from your continued participation. The market is not designed for your financial freedom. It is designed for the maximum extraction of wealth by those with the most sophisticated tools. So, what is the takeaway? Do not be a lamb led to slaughter. Educate yourself about the true nature of modern financial markets. Understand that when you press that buy button, you are entering a battlefield where the odds are stacked overwhelmingly against you. The algorithmic takeover is complete. Your market is indeed their playground. The question is, are you going to keep playing by their rules, or are you going to learn how to navigate this new, brutal reality? The choice, as always, is yours. But ignorance is no longer an excuse.
High-frequency trading. Why your slow human brain stands no chance.
All right, let us peel back another layer of the financial onion, shall we? You thought the algorithmic takeover was a broad, abstract concept? Think again. Today we are zooming in on its most potent weapon, the financial equivalent of a cheetah on steroids, high-frequency trading. And here is the brutal, unvarnished truth. Your slow, squishy, human brain stands absolutely no chance, none whatsoever. For centuries, trading was a human endeavor. It involved shouting, hand signals, gut feelings, and the occasional well-timed cigar. It was messy, inefficient, and gloriously human. Then came the machines, and with them, the relentless march of progress, which in finance often means the systematic dismantling of any advantage a mere mortal might possess. High-frequency trading, or HFT, is not just fast trading. It is trading at the speed of light, or as close as physics allows. We are talking about transactions measured in microseconds, millionths of a second, but you are still blinking. An HFT algorithm has already executed 1,000 trades. While your neural pathways are struggling to process the latest tweet from a CEO, these machines have already analyzed the sentiment, cross-referenced it with historical data, predicted market movement, and profited from it. Your brain, a marvel of biological engineering, is simply not built for this. It is a beautiful, complex organ designed for hunting mammoths, composing symphonies, and worrying about your mortgage. It is emphatically not designed to compete with a server rack full of specialized processors, located mere feet from an exchange's matching engine. Consider the sheer disparity. Your reaction time, even for the most caffeinated day trader, is measured in hundreds of milliseconds. An HFT system operates in single-digit microseconds. That is a difference of roughly 100,000 times. Imagine Usain Bolt racing against a bullet train. So that is you against HFT. And the bullet train is not just faster. It also has a supercomputer for a brain. Access to every piece of public information, and some not so public. Thanks to co-location and absolutely zero emotional baggage, these algorithms do not get greedy after a winning streak. They do not panic during a market downturn, and they do not second-guess their decisions. They simply execute their program directives with cold, calculating precision. They are designed to exploit tiny, fleeting inefficiencies in the market, to arbitrage minuscule price differences across multiple exchanges, and to provide liquidity while simultaneously extracting value at speeds that make human intervention utterly impossible. The strategies employed by HFT firms are often opaque and incredibly complex. They include techniques like spoofing, placing large orders with no intention of executing them, to trick other traders into moving prices, layering similar to spoofing, but with multiple layers of fake orders, in quote, stuffing, flooding exchanges with orders and cancellations to slow down competitors. While some of these practices are now illegal, the core principle remains: gain an informational or speed advantage and profit from it. So when you are sitting there meticulously analyzing a company's financials, reading analyst reports, and trying to predict the next market move, you have to understand that you're playing a game where the rules are set by entities that exist on an entirely different plane of existence. Your carefully constructed investment thesis, your hopes for retirement, your dreams of financial independence. They are all just data points in an HFT algorithm's relentless pursuit of profit. This is not a lament. It is a stark warning. The romantic notion of the individual investor outsmarting the market is frankly adorable, but it is also dangerously naive in the age of HFT. The market is no longer a level playing field. It is a digital battlefield where the most advanced weaponry wins. Your slow human brain, with all its beautiful complexities and frustrating limitations, is simply outmatched. The question is not whether you can beat them. It is how you can survive in a market dominated by them. Understanding this fundamental shift is the first step. Ignoring it is financial suicide. The market has evolved, and if you wish to participate, you must evolve your understanding of its true mechanics. Because when it comes to high-frequency trading, your slow human brain truly stands no chance.
Flash crashes. Just a convenient glitch for the robot elite.
All right, fellow inhabitants of this increasingly digital financial circus, let us continue our journey down the rabbit hole. We have discussed the algorithmic takeover, the cold, hard reality that your market is now their playground. We have dissected high-frequency trading, exposing how your slow human brain stands no chance against the silicon-powered cheetahs of Wall Street. Now, it is time to address the elephant in the server room, the recurring phenomenon that is always dismissed as a mere glitch, the flash crash. Oh, the flash crash. That delightful moment when the market, without warning, decides to impersonate a bungee jumper without a cord, plummeting hundreds or even thousands of points in mere minutes, only to miraculously bounce back as if nothing happened. And what is the official explanation? Always a variation of technical issue, rogue algorithm, or the ever-popular fat finger error? How wonderfully convenient. It is as if the financial elite expects us to believe that these sudden, violent market dislocations are simply accidental hiccups, rather than a perfectly orchestrated opportunity for the robot elite to feast. Let us be brutally honest. Flash crash is not some random act of God or a clumsy human mistake. It is the inevitable byproduct of a market designed for speed, not stability. It is the logical conclusion of an ecosystem dominated by algorithms that communicate and react to each other at speeds beyond human comprehension. When one algorithm sneezes, 1,000 others catch pneumonia, and the market experiences a sudden, violent convulsion. The interconnectedness, the feedback loops, the sheer velocity of modern trading means that a minor imbalance can cascade into a full-blown market free fall in the blink of an eye. And who, pray tell, benefits from such chaos? Certainly not the individual investor who watches their portfolio evaporate in real time. Their stop-loss orders triggered at absurdly low prices, only to see the market recover moments later, leaving them holding the bag. No, the beneficiaries are the very same robot elite we have been discussing. The high-frequency trading firms, with their co-located servers and pre-programmed strategies, are perfectly positioned to capitalize on these moments of extreme volatility. While you are panicking, frantically refreshing your screen, and perhaps shedding a tear or two, their algorithms are executing millions of orders. They are buying up assets at fire sale prices, scooping up shares from panicked retail investors, and institutional funds whose automated systems are also forced to sell. They are shorting the market on the way down, then reversing positions to profit from the inevitable rebound. For them, a flash crash is not a crisis. It is a liquidity event, a massive transfer of wealth from the slow and unprepared to the fast and technologically advanced. It is a digital gold rush, and you are the unwitting prospector whose pickaxe just broke. Regulators, bless their hearts, always promise to investigate. They implement circuit breakers and speed bumps, which are about as effective as putting a band-aid on a bullet wound when dealing with systems that operate in microseconds. These measures are often reactive, designed to address the last flash crash, while the algorithms are already evolving, finding new ways to exploit the market's inherent vulnerabilities. It is a perpetual game of cat and mouse, except the cat is a supercomputer, and the mouse is a committee of well-meaning, but ultimately outmatched humans. So, the next time you hear about a flash crash, do not fall for the glitch narrative. Do not believe it is simply an accident. Understand that in a market where speed is king and algorithms are the undisputed rulers, these events are not just possible. They are, in a perverse way, profitable. They are a feature, not a bug, for those who have built the playground and set the rules. They are a convenient mechanism for the robot elite to consolidate their power and wealth, leaving the rest of us to wonder what fresh hell the market will unleash next. The market is not broken. It is simply working as intended for those who control the levers of algorithmic power. Your financial future depends not on outsmarting these machines, but on understanding their game and refusing to be their unwitting pawn. The flash crash is just another stark reminder. In this new financial reality, the robots are not just playing. They are winning, and they are doing so with ruthless, emotionless efficiency.
The invisible hand is now wired. How algorithms manipulate your money.
Ladies and gentlemen, esteemed participants in the grand casino we now call the financial market. We have journeyed through the algorithmic takeover, witnessed the merciless efficiency of high-frequency trading, and even exposed the convenient glitch of flash crashes. Now, it is time to confront the ultimate truth, chilling reality that underpins all of it. Adam Smith's venerable invisible hand is no longer an abstract economic force. It is wired, it is digital, and it is manipulating your money with an intelligence and precision that would make even the most cunning human schemer blush. For centuries, the invisible hand was a poetic metaphor for the self-regulating nature of free markets, where individual self-interest, guided by competition, inadvertently led to overall societal benefit. A beautiful thought, was it not? A comforting illusion. Today, that hand is not invisible. It is merely obscured by layers of complex code operating in the shadows of data centers. And it is anything but benevolent towards the average investor. Its new wired invisible hand is an algorithmic construct, designed not for collective good, but for the systematic extraction of wealth. These algorithms do far more than just execute trades at lightning speed. They are actively shaping the very fabric of the market, are the puppet masters of price discovery, often dictating where prices should be, rather than merely reacting to supply and demand. How do they achieve this digital sorcery? Through a myriad of sophisticated techniques that exploit every conceivable market inefficiency and human psychological bias. Consider the order book, that seemingly transparent ledger of buy and sell orders. Algorithms can flood it with fake orders, creating the illusion of strong demand or supply, only to cancel them milliseconds before they can be filled. This spoofing or layering manipulates human perception, tricking you into buying high or selling low. While the algorithms quietly profit from your induced panic or misplaced optimism, it is a digital con game played on a global scale with your hard-earned capital as the chips. Furthermore, these wired hands are constantly scanning the digital ether. They devour news headlines, social media sentiment, analyst reports, and even satellite imagery of parking lots to predict economic activity. But their influence does not stop at prediction. They can amplify narratives, create momentum where none existed, and even trigger cascades of automated buying or selling that can swing entire markets. They are not just reacting to information. They are, in essence, manufacturing market sentiment. Your emotional responses, your fear and greed, are merely predictable inputs for their profit-maximizing equations. And let us not forget the increasingly opaque world of dark pools and off-exchange trading. A significant portion of market activity now occurs away from public exchanges in private trading venues where algorithms reign supreme. Here, large institutional orders can be matched without impacting public prices, allowing the robot elite to move vast sums of capital without tipping their hand. This creates a two-tiered market, one for the technologically advanced, it's operating in the shadows, and another for the retail investor, left to contend with the manipulated public prices. The invisible hand, once a symbol of market efficiency, has become a tool of algorithmic manipulation. It is a sophisticated system designed to identify and exploit your behavioral biases. Do you tend to chase gains? There is an algorithm for that. Do you panic sell during downturns? There is an algorithm ready to buy from you. Your predictable human flaws are their greatest assets. This is not a conspiracy theory whispered in hushed tones. It is the open secret of modern finance. The market is not a neutral arbiter of value. It is a complex, interconnected system where the most advanced algorithms wield immense power. They're not just participating in the market. They are actively shaping it, bending it to their will, and extracting value at every turn. So, what is the takeaway from this unsettling revelation? It is a call to awaken. It is a demand for you to understand that your financial decisions are being made in an environment that is fundamentally rigged against you if you operate with outdated assumptions. The wired invisible hand is not guiding you to prosperity. It is guiding your money into the pockets of those who control the code. Your survival in this new financial landscape depends not on wishing for a return to simpler times, but on a ruthless understanding of the present reality. The algorithms are manipulating your money. The question is, what are you going to do about it? Ignoring this truth is no longer an option. It is a guarantee of becoming another data point in their relentless pursuit of profit.
The end of fair play. Are you still willing to be their pawn?
All right, you brave, perhaps foolish retail investor. We have journeyed through the digital labyrinth of modern finance. You've seen the algorithmic takeover, the merciless efficiency of high-frequency trading, it's the convenient glitch of flash crashes, and the insidious wiring of the invisible hand. Now it is time for the final, most uncomfortable question. The end of fair play has arrived. Are you still willing to be their pawn? For generations, the stock market was presented as a grand arena of opportunity, a place where intelligence, diligence, and a bit of grit could lead to prosperity. It was the quintessential American dream, distilled into ticker symbols and quarterly reports. You were told to do your research, invest for the long term, and trust in the fundamental value of companies. That, my friends, was the narrative of fair play, a comforting bedtime story for adults. Wake up, that story is dead. Buried under mountains of data and executed by algorithms that do not care about your dreams or your retirement fund. The concept of fair play implies a level playing field, where participants have roughly equal access to information and an equal chance to profit based on their skill. This is a laughable relic in today's financial markets. You, the individual investor, are bringing a butter knife to a nuclear war. While you are meticulously poring over a company's balance sheet trying to discern its true value, the algorithmic titans have already processed every public statement, every news article, every social media whisper, and every satellite image of their parking lots. They have not just analyzed the data, they have already traded on it, moved the price, and are now looking for the next micro-opportunity. Your research is their stale breadcrumb. You are a pawn because you are predictable. Your human emotions, fear, greed, impatience, the dreaded fear of missing out, FOMO, are not weaknesses to be overcome. They're exploitable data points for the robot elite. Algorithms are designed to sniff out these emotional triggers. They can create artificial momentum to lure you into overpaying, or engineer sudden drops to scare you into selling at a loss. Remember those flash crashes we discussed? They are not just random acts of chaos. They're often moments of extreme wealth transfer, where your panic selling becomes their profitable buying spree. You are not just losing money, you are actively contributing to their gains, playing your pre-programmed role in their grand financial chess game. The market, in its current iteration, is a sophisticated wealth extraction machine. It is designed to systematically siphon capital from the less informed, the slower, and the emotionally vulnerable directly into the coffers of those with the most advanced technology and the fastest connections. This is not some accidental byproduct of technological advancement. It is the inherent outcome of a system optimized for speed and algorithmic advantage. Every time you place a trade, you are entering a domain where the rules are set, often bent by entities that operate on a different plane of existence. So, what is your role in this new, brutal reality? Are you still willing to be the unsuspecting liquidity provider, the sacrificial lamb in the algorithmic slaughterhouse? Are you content to be a data point, a predictable input in their profit equations? The romantic notion of the individual investor outsmarting the market, of finding that hidden gem before anyone else, is a dangerous fantasy. The invisible hand is now wired, and it is not guiding you to prosperity. It is guiding your money directly into the pockets of the robot elite. This is not a call to abandon the markets entirely, for capital formation and growth are still essential. However, it is a stark, acidic demand for you to shed your illusions. Understand the game you are playing. Recognize that the fair play you once believed in is a myth. Your traditional investment strategies, while perhaps still valid for true, multi-decade long-term holding, are utterly outmatched in the short to medium term by the algorithmic behemoths. The question is no longer how can I beat the market, but rather how can I survive, and perhaps even thrive, in a market dominated by algorithms. It requires a fundamental shift in perspective, a ruthless acknowledgement of the new financial order. Continuing to play by the old rules with your slow human brain and your quaint notions of fair play is a guaranteed path to becoming just another statistic, another pawn sacrificed on the digital chessboard. The choice is yours. Remain ignorant and exploited, or awaken to the reality and adapt your approach. Now, the game has changed. Are you going to keep playing their game, or are you going to learn how to navigate this new, wired world?
Beyond the illusion, it's time to act.
We have unmasked the sophisticated wealth extraction machine masquerading as a fair market, revealing the algorithmic overlords that manipulate its every pulse. The illusion of fair play has been irrevocably shattered, and the romantic notion of individual investors outsmarting the system now stands exposed as a dangerous fantasy. The uncomfortable truth demands a response from you, the individual navigating this digital battlefield. Will you continue to be the unwitting gladiator, providing liquidity for their strategies, or will you shed the rose-tinted glasses and ruthlessly adapt your understanding of this new, brutal reality? Your financial future hinges not on clinging to outdated narratives, but on a pragmatic acknowledgement of who truly holds the reins. To survive, and perhaps even thrive, in this algorithm-dominated landscape requires continuous education and a community committed to understanding its true mechanics. Do not allow your slow human brain to be systematically outmaneuvered. Equip it with knowledge. Subscribe to our channel for more unvarnished truths and strategic insights. If this stark reality resonates with you, demonstrate your acknowledgement by giving this content a like. Share this critical revelation with every individual still clinging to the myth of the invisible hand. And comment below with your perspectives, strategies, and defiance. Together, we can illuminate the shadows of algorithmic power.